A key outstanding issue in this year's budget is that the National Treasury plans to borrow 190 billion shillings from domestic lenders, a situation that most people had not anticipated, since the government had hinted it will leave these to investors in a move aimed at reducing interest rates. The expectation was that Treasury would finance the budget through taxes and international financing such as the sale of international bonds.
We are aware of the need to mobilize more domestic resources for our transformational agenda. Therefore, we will strengthen revenue collection efforts by bringing into the tax net all potential taxpayers. This entails implementing reforms to enhance revenue administration capacity, simplifying and modernizing tax legislation, and leveraging ICT to enhance tax compliance.
When National Treasury proposed the 1.78 trillion shillings budget last month, there were different speculations from various stakeholders as to how it was going to be financed. Last year, the National Treasury planned to finance the budget with 920 billion shillings from revenue collection by the Kenya Revenue Authority, a figure which has gone up by almost 200 billion shillings this year to 1.1 trillion shillings. According to National Treasury, this will be made possible by the ongoing reforms in tax and customs administration.
We are aware of the need to mobilize more domestic resources for our transformational agenda. Therefore, we will strengthen revenue collection efforts by bringing into the tax net all potential taxpayers. This entails implementing reforms to enhance revenue administration capacity, simplifying and modernizing tax legislation, and leveraging ICT to enhance tax compliance.
This means that the Kenya Revenue Authority will have to ensure that more people comply with filing their tax returns, and possibly the authority may find more ways to raise that amount, putting a strain on the general cost of living. Although taxing may not be directly to the mwananchi, imposing tax on manufacturers may mean the burden is passed on to the consumer.
We are deepening financial sector reforms to create a vibrant, accessible, efficient, and global competitive financial sector that promote high levels of savings to finance our transformation agenda.
National Treasury also proposed the tabling of the Tax Dispute Procedural Bill, a bill that is expected to address how disputes arising from tax payments are handled.
The bill is aimed at making tax administration easier, while at the same time reducing the cost of compliance.
This will be among many other bills that the National Treasury expects to table in Parliament in the next financial year that starts in July. Ruth Mutegi, Channel 1 Budget 2014.